More on the state of the consumer. Stephen Yalof, CEO of outlet mall operator Tanger, joined us here in-house at the NASDAQ market site. Stephen, great to have you with us. Welcome to Fast Money.
Thank you.
Costco on this call was just saying that the consumer is more choiceful. Are you finding that the consumers who go to a Tanger outlet, they are more choiceful as well?
For sure. And they were also, we were talking about the value consumer as well.
Yeah.
And that's really what you get when you come and shop at one of our shopping centers. It's brands you love, great pricing every day. And I think that's what the consumer is looking for.
What have you noticed in terms of any sort of traffic changes between April to May?
Well, interestingly, when tariffs were first announced in the beginning of April, our traffic began to build and continues to build. So our traffic in April and May outpaced last year's traffic by close to 5%.
How do you view the market in terms of expansion and where you expand and how you expand in this environment?
Well, you know, right now it's really more of a acquisition market than it is a new development market. And we built a shopping center in Nashville, and we're purchasing assets currently at almost 50% of the cost of the replacement cost. So we're making those trades right now.
So one thing I always wonder about is consumer sentiment versus what the consumer actually does. So we get these numbers today, consumer sentiment well below, and you're talking about April was really good. How often do you get a divergence between consumer sentiment and what the consumer is actually spending? Well,
you know, it was interesting. In March, we saw our traffic picked up, but the sales were down. And then in April, our sales and traffic began to track one another. So, you know, expectation-wise, you know, I think one of the things that we're doing, particularly as a reaction to tariffs, is with all the uncertainty in the market, we're encouraging a number of our retailers, particularly those with back-to-school product, to start thinking about pulling back-to-school up a little bit sooner. We're going to start our back-to-school sale in June.
Hold
1st.
on a second. We haven't even gotten out.
School's not. So you got to be very thoughtful with regard to the geographies because they are out in certain parts of the country,
right.
but not in others, and we're mindful of that. But the point is that if there is a consumer that wants to make purchases, that's concerned that pricing may be higher in the back half of the year, that product may be more scarce in the back half of the year, if they want to get the things they want, right now is a good time. And with partners, whether it's Nike, Adidas, some of the partners in our shopping centers, we're working with them to start that promotion a lot sooner.
Stephen, when I go to your Riverhead outlet all the time. It's everything I need. And you can run the gamut in there, though, even though it is value with great brands. There are, within that SKU, I mean, there are certain parts of discretionary spend that aren't doing so well. And we talk about the athleisure and the footwear space. What can you see with your clients? You don't need to name any names. But if you looked at the stocks, you know, Deckers just had a really tough print, even though there's a line outside of that store whenever I drive by it. So, you know, help us understand what's in your lot and who's doing well as far as you can tell.
Yeah. Well, first of all, we're diversifying the mix in those centers. So, you know, I mean, we just added Shake Shack, so Shake Shack's coming soon.
Right on. No, that's good.
And the reason why that's an important part of the story is because we understand that consumer is really shopping a little bit more locally now. So that local consumer wants more diversity of product when they come and shop in our centers. And, you know, you hit the nail on the head. From footwear to apparel to hard goods. You know, our hard goods stores seem to continue to be doing well, particularly out in Riverhead. We got a great collection of them.
Yep.
As far as footwear is concerned, you know, even though Nike might have reported a couple of bad quarters, we still see lines and people lining up to get Nike because it's brand at great pricing. And that's just a really important part of the story. We keep on, you know, hammering on that messaging, but it's critically important. People aren't looking for commodities at the best price when they shop with us, looking for the things they want at the best possible price. And we deliver that every day. Every day on sale, we deliver that every day. So I think that's really important. Variety of offering plus great value encourages the customers to come. They stay longer when they're there, and they buy more things, build bigger baskets.
And you talked about that on the first quarter earnings on May 1st. I looked at the quarter, I thought it was really good. And then 10 days later, you said, you know what, it's so good, we're going to authorize a $200 million stock repurchase plan. So I think that's you saying, we just think our stock is too cheap here. Do you want to speak about that?
Well, we do. I mean, you know, our stock in the last several months got up as high as 36.50. You know, we were able to sell some stock at ATM at that pricing, some forward stock. We've got about $70 million worth of forward equity that we can draw from. We're, like I said, we're in acquisition mode right now, and we're looking to buy assets. That being said, at the $30, I guess we crossed over 30 today. But at $30, yeah, I think the stock is extraordinarily cheap, and I think it's a great deal. So if there's investors out there that are looking to buy a great stock, I think that's what we're selling.